title says it all. Is Raoul Pal just said the unthinkable about crypto 2026 new prediction. Here's the punchline in one sentence. Global liquidity is the one force that drives about 90% of Bitcoin and crypto price action. Not vibes, not headlines, liquidity. Think of liquidity as the tide. When central banks and governments add money to the system through lower rates, QE, spending, the tide comes in and risk assets float higher. When they drain it, higher rates, QT, stuffing cash back into the Treasury general account, the tide goes out and everything feels heavy. That's exactly what we just lived through, a double tightening. The Fed kept quantitative tightening on while the Treasury rebuilt its general account, literally pulling dollars out of circulation. So if Bitcoin felt stuck despite great fundamentals, that's why. The tide went out. Now, the unthinkable part isn't doom, it's the setup. Liquidity cycles don't stay tight forever. Governments roll debt constantly. To roll it, they need smoother markets and cheaper financing. That pressure forces more liquidity back in. Markets front run that shift. Last year, when liquidity turned, Bitcoin ripped 60% in weeks. So what happens when the next liquidity wave hits? According to Raoul Pal, clarity is close, and when it arrives, the reaction could be violent to the upside. Timeline, watch the year end into early 2026. If spending normalizes and the debt rollover accelerates, the tide rises. Historically, crypto reacts fast. Targets, Pal thinks holding above $100,000 for Bitcoin is reasonable. Not a guarantee, just what the liquidity math suggests when momentum returns. Zooming out, here's Pal's everything code. Is the entire financial system bends around one need, rolling massive government debt. Demographics, slow growth, deficits stay high. The path of least resistance is expanding liquidity over time. If that's right, crypto's total market cap, about $4 trillion today, could head to $100 trillion by 2032. That's roughly $96 trillion in new wealth created across the asset class if adoption keeps compounding. So what do you prioritize in that world? Scarcity. In an AI era where content is infinite, the scarce stuff wins. Crypto becomes the rails for value transfer. Bitcoin and high-quality networks protect against debasement. And digital art, especially the top-tier provenance-rich pieces, emerges as a way to store wealth that algorithms can't copy. Strategy in plain English: stop refreshing headlines and start tracking liquidity. Watch rate paths, QT versus QE, the Treasury general account, debt rollover schedules. When the tide turns, crypto doesn't tiptoe, it sprints. Right now feels like a quiet harbor, but quiet harbors precede big waves. If the liquidity cycle expands, expect acceleration, first in narrative, then in price. Remember, manage risk, size positions responsibly, and don't let FOMO run your life. The goal is to surf the tide, not fight it. If this helped, tap like, hit subscribe, comment what you're watching, rates, TGA, or something else most people miss. See you on the next one.